This is our next depreciation question. Now, this question is quite different to the ones that we've seen before. If we just focus on reading the question here and we can ignore, I'll just still leave it here, but we'll ignore everything else that's going on. So, Euro Ltd are a sports or manufacturer. Their company depreciates its machinery in a straight line basis over 10 years. We haven't seen that before. Basically, all of their depreciation is going to be over 10 years. So if I have a car, I expect that the car will basically be worth more or less scrap value at the end of 10 years. So scrap value is estimated at 5% of the original cost of the machine. So obviously it's a company that are using machines. They expect to get 10 years out of the machine, and after that they expect the machine to be more or less worth nothing. And they'll sell it for parts or sell it for whatever. It'll basically have its scrap value. So we need to calculate depreciation, which we haven't done before. We actually need to calculate how much the depreciation is going to be. The depreciation is not 5%, the scrap value is 5% of the original cost. So what we're looking at here is that we have a bunch of machines here, and we don't know how much to depreciate them by each year. We're not multiplying by 15 or 10% or whatever. So we need to find out how much the depreciation is, and we can do that here. So this is a scrap value depreciation method. So it's a different method. And what we do is we take the cost of the machine and we take away the scrap value. Because if the machine costs, let's say, 50,000 here, and the scrap value is 5% of it, which would be 2,500, that means that on day one it cost 50,000. And after 10 years, because we know we have them for 10 years, after 10 years it's only worth its scrap value, which is 2,500. So to get from 50,000 to 2,500, it would have had to have depreciation of 47,500. In other words, this is your 100%. It'll drop down to 5% after 10 years. So the total depreciation will be equal to 95%. So how do we do all that? It's only me talking through it there, but this is how we look at doing it. So the cost of the machine in the first case is 50,000. We'd need to find the scrap value, which would be 5% of that, and take it away, and that'll be the total depreciation. We'll then divide the total depreciation by the number of years, and we'll find the total depreciation per year. So as I said, for the first machine that we have, the cost is 50 grand. To find the scrap value, we get 5% of it, which is 2,500, and we know that we're depreciating it over 10 years. So I'm just going to clear these a second. So we're depreciating over 10 years. So this is our way of figuring it out. The cost of the machine minus the scrap value is total depreciation divided by the number of years is depreciation per year. So cost of the machine 50 grand minus the scrap value 2,500. So that's giving us total depreciation of 47,500. If I divide that, that's total depreciation over 10 years. So let's divide it by 10 years, and I'm finding my depreciation for 1 year, 4,750. So again, you have the cost, they always give it to you. To find the scrap value, you just get 5% of it, and then we're told all of the machines are depreciated over 10 years. So you have the cost, take away the scrap value, whatever you get here, divided by the 10 years. And as I said, 4750 is the depreciation per year for machine 1. So that's the depreciation for full year for machine 1. And you just have to be careful as well that obviously, like normal, the dates here might change that. So although that'll be the depreciation for machine 1 for 2011 and 12 and potentially onwards. For 2010 we only bought it at the 1st of July, so we didn't have it for the first 6 months. So for 2010 we only had it for 6 months, therefore as normal you take the depreciation per year and you'd find 6 months of the 12. So 2375 is actually the depreciation for 2010. But the depreciation per year is just gotten again by cost minus scrap value divided by the number of years. So I've quickly done that here for some of the rest of them. Machine 2 is 65,000 it cost. The scrap value is 5% of it, so I get 5% of that, which gives me 3250, and I take it away. It gives me 61,750 divided by 10 years, 6175. So machine 2, a full year's depreciation is 6,175. Machine 3, 75 grand. 5% of it, take it away, divided by 10. Machine 4, so I'm just doing it here just to show. Machine 4 is obviously whenever you get rid of the machine here, completely destroyed. On the same date, a new machine, machine 4, was purchased at a cost of 60 grand. So that's my 60 grand one here. 5% of it is 3 grand, take it away, gives me 57 grand divided by 10, 5,700 is my depreciation per year. And the fifth one is a little different. So again, 2014, machine 2 traded in against machine 5. Machine 5 cost 55,000, but hold on. The balance of the purchase price was paid immediately, but for the machine 5, it cost 2,000 to have the machine delivered and 400 to have it installed, and they are additional costs. You have to include them as well. It's like if you're building a house, you don't just pay for the bricks and the mortar. You have to actually pay for somebody to deliver it. You have to pay for somebody to install it. You have to pay for everything to be overseen, and they're all costs. So if machine 5 costs 55 grand and it's 2,000 for it to be delivered and 400 to be installed, therefore machine 5 did not just cost 55 grand. It's 55 grand is its initial cost, plus the 2,000 for delivery, which we can see here, plus the 400 to have it installed. So for machine 5, 55 grand plus 2 grand plus 400 is 57,400. That's its total cost. Again, as normal, like we've done up here, if the total cost is 57,400, I get the scrap value, which is 5%, 2870. I take that away, gives me just shy of 55 grand divided by 10 years. And my depreciation per year for the machine number 5 is 5453. So, as I've said here, apart from that, like normal, you need to adjust the depreciation if we didn't have the machine for a full year. So, machine 2, we had it in 2010, we had it for 6 months, so 6175 multiplied by 6 divided by 2 is 2375. So that's just a reminder that obviously, as I said previously and we looked at here, if you didn't have it for a full year, so that's actually not the right calculation, because 6 months is not what we had machine 2 for. It was actually machine 1. So I'm just going to clear that in a second. But I've shown it above here that obviously what I said here is that if you don't have it for a full year, then you need to find how much depreciation you had for that specific year. And I showed it up here that for machine 1, depreciation per year is 4750. And obviously for that year, we only had it for 6 months for 2010, 6 months. So that's how I worked that out. Now I've hidden the table because obviously it takes quite a bit of time to do up real time. So I've done it previously in advance, and we'll look at it here now. I'm just resizing this so that we can actually read it. And now we'll get on to the table. So okay, that should be more visible. Okay, so we only need to focus on this part of the question. This is my normal table. This is my machine numbers. You'll see here that the modifications is down here. There is no fridge attached to a machine. In this case, it said machine number 3 had modifications carried out to its motor to increase productivity at the beginning of 2014, and it cost 4 grand, and its depreciation was 475 per year. So we know that the machine 3 had what did I say again? Modifications to the motor. So I just added modifications here as being an attachment to machine 3. So there's no fridge. It's just a different here. We just modified machine 3. These are the costs as normal. I'm looking at the costs here. The one thing actually I'll say is I'm going to leave this one out of this a second. We won't need to look at this a second. Okay, I'll explain why I'm moving that in due time. If we look here at, again, I'm just going to change this to make it all in one line, and we said that this machine here was a 4,000 modifications. Okay, So again, just square back to this. So these are all the costs. Again, we'll just focus on the ones we bought first. So for 2010, machine cost 50 grand. We calculated that the depreciation per year is 4750, but we didn't have it for all of 2010. So if that's my depreciation per year, I only had it for 6 months in 2010, so I worked out 2010's depreciation to be 2375. For 2011 and 2012, we had it for the full year. So let's put in 4750 for both. Total adds up here to be 11,875 for those three figures. Machine number 2 cost 65 grand. Again, for 2011, we did not have it for the full year. When I calculated the depreciation per year, it was 6175. But I only had it for 9, 10, 11, 12. I had it for 4 months in 2011. So 6175, find 4 out of the 12 months, and it gives me 2058. So that's depreciation for 2011, the first year where we didn't have it for the full year. But for 2012, we had it for the full year. So this normal depreciation we found here, 6175, slots in for this. Total depreciation 8233. Machine number 3 cost 75 grand. We purchased it at the beginning of 2012, which means we had it for the whole of 2012. So when we calculated the depreciation here, it was 7125. So 7125 is total depreciation for 2012. And obviously this is my depreciation at the question starts, first 2013. So these three figures can add up here. I can add up those three figures, and I'm getting 27233 as my total depreciation for 2013 at the beginning. And obviously we'll look at that again later on in the question. If that's my total depreciation at the beginning of 2013, if I just show that here, I'd be showing that as my balance. I also need my total cost. So my total cost of the three machines that I had at the beginning of the question, at the beginning of 2013, that's why I moved that down. We didn't purchase it until 2013 was, we didn't purchase the modifications in 2014. So these three that we purchased before the question starts, they are the total costs at the beginning of the question. Okay, so we've looked at the depreciation here for these guys. We've totaled it all up. What happened? So machine 1 was ruined. Again, we're not focused on the stuff like compensation now. We just want to finish the table. So the insurance company paid out. We'll need to look at that later. There was 500 received from the sale of the machine to a scrap dealer. Look at that later. On the same date, a new machine was purchased costing 60 grand, and obviously that's where we put in the 60 grand new vehicle or new machine. But for this machine here, this 50 grand one, we have our depreciation here at 4750. That's depreciation for a full year. How many months did we have it for? We had it for all of January and all of February. So this 4750 is my depreciation for machine 1. If I find 2 months, so essentially 4750 multiplied by 2 divided by 12, because that's a full year, I want to find 2 months, because we only had it for 2 months here, it gives me 792. Again, my total depreciation then is going to be 12,667 for machine 1. For machine 4, which we, this again at that same date, machine 4 was purchased, 60 grand was its cost. We would have had it from beginning of March to the end of December, so that's 10 months. So for machine 4, we found total depreciation per year to be 5700. If I multiply that by 10 divided by 12, it gives me 4750, because I only had that for 10 months of that year. For the rest of 2013, I had machine 2 for the full year and machine 3 for the full year. So let's just take those full year depreciation figures and put them in. Total depreciation for 2013 is just shy of 19 grand. 2014, what happened here? Well, we modified machine 3. Its cost was 4 grand. The depreciation per year and the modification was 475. So I can put in 475 here. I'm just moving it down. 475 is my depreciation on a modification. Let's just put that in. So machine 2 was traded in. We traded in after 3 months of the year were finished, so we only had it for 3 months of the year. So machines 2's depreciation was 6175. If I want to find 3 months depreciation, I just multiplied by 3 divided by 12. 6175 multiplied by 3 divided by 12 gives me 1544. That's my depreciation for machine 2 for 2014, because we only had it for 3 months. Total depreciation when I was to sell it is 15952, because I just add up these three figures. Apart from that, we purchased a new machine. That new machine cost us 57,400 is the total cost, because we added up the 55 plus the 2,000 plus the 400. We found the total depreciation already to be 5453, but we did not have machine 5 for the full year. We had it from the 1st of April on, so we didn't have it for the first 3 months. We had it for the remaining 9. So 5453 multiplied by 9 divided by 12, because I'm trying to find out how much depreciation was for 2014, gives me 4090. Again, that's total depreciation for this vehicle. Machine 3, nothing happened to it, and machine 4, nothing happened to it in 2014. So I just put in the normal depreciation figures that I would have worked out up here. Total depreciation for 2014, total depreciation for 2013, total depreciation at the 1st of the 1st when the question starts in 2013, because we're only looking for these 2 years, 13 and 14. And this is the total cost of the vehicles that are the machines that we had at the 1st of the 1st 2013 as well. That is our table, and the next day I'll go through the accounts and figuring that out, which we've seen before. But this is new here, so this is us calculating our depreciation using the scrap value method. Thanks for listening.